Hey everybody, Rob Maurer here as the wild times in the market continue. Volatile day for the NASDAQ and a couple of key earnings reports after market close that we'll take a look at. Then for Tesla, we've got a new note from Morgan Stanley, news on the Tesla solar roof, and a little bit more news out of the White House. All right, so Tesla today down 1.6%, closing at $891.14. But of course, really rough day in the markets. The NASDAQ down 3.75%. This was the worst day for the NASDAQ so far this year. So Tesla actually performing relatively well. On a day like this, it wouldn't be too surprising to see Tesla down 7-8% or so. Not only was this the worst day for the NASDAQ this year, actually the worst day for the NASDAQ since June 2020. So the worst performance in about 18 months. Obviously, Facebook, now Meta's earnings report kind of kicked that off as we talked about yesterday. Meta today closed down about 26%. Now today there are more big earnings reports. Tesla is actually up about 1.5% after hours with another really big signaling earnings report from Amazon, and they came through with a pretty significant beat. Amazon, as I'm recording, up about 18% after that report in after hours trading. Amazon definitely got punished during normal trading hours in anticipation of a possible miss here, so this should be some pretty good relief for the market. Now, the earnings was a little bit confusing if you did happen to look at this. They reported $27.75 earnings per share versus expectation of around $3 to $4. But the big difference here was driven by Rivian, so 11.8 out of the $14.3 billion in Amazon's net income was driven by their position in Rivian. So factoring that out, that was about 82% of their net income. So just removing that, making no other adjustments, that would bring earnings per share down to $4.85. So still a beat, even though total revenue did come in just a little bit light of expectation. AWS revenue did beat. Generally, you don't see trillion-plus dollar companies moving around 18% after reporting earnings, so we're clearly in very volatile times right now. The other eyebrow raiser after hours was Snap reporting earnings, so they actually posted their first profit ever. The stock is up 50+% right now, so some attention on that, and that might help the market a little bit as well, especially those higher growth names. But even with that extreme increase, their stock is only back to about where it was 3 weeks ago. So again, just extreme volatility right now, which is important to recognize even for these other companies because Tesla gets caught in those waves as well. Last earnings I want to touch on is Ford. They also reported after hours as we had talked about before. They did miss and their stock is down a bit after market close. Earnings per share came in at 26 cents versus 45 cents expected, and revenue fell a couple $100 million shy of consensus for the automotive business. Looking at the earnings report, and because we talked about GM's earnings before interest and taxes yesterday, let's take a look at Ford's. Ford said for the year, their adjusted EBIT was $10.0 billion. Remember that compares to Tesla's 2021 EBIT of $8.7 billion, so Tesla catching up there. And Ford is guiding for between $11.5 to $12.5 billion for 2022. GM said that they expect between $13 and $15 billion in EBIT. So for 2022, Tesla should almost certainly pass Ford, and I would expect them to also pass GM as well. By the way, Ford's net income was quite a bit higher. That was almost $17.9 billion for the year, but that does include their Rivian gains. I think they've taken that out of their adjusted EBIT. The other metric I want to quickly highlight is their operating income. For the year, they did $4.5 billion in operating income. Tesla for 2021, $6.5 billion. So even though Ford sold more than 4 times as many vehicles as Tesla did last year, Tesla was able to deliver almost 50% more operating profit on a much smaller scale. Over the next 12 to 24 months, Tesla should be taking over all of these profitability metrics from US automakers, and then we'll move up to revenue. That is actually the topic of a new note today from Morgan Stanley. No changes here. This is just, again, one of those, I guess, kind of blog post type of updates. Could have used one more proofread here, but this reads, quote, "Most auto investors we speak still struggle with the idea that Tesla could ever be bigger than either GM or Ford. We expect Tesla revenues to be larger than GM plus Ford combined by 2027. The zero-sum game is hard to see today, should become obvious over the next 24 months, end quote. I think most of us would argue that this has been obvious for quite some time now, but this just kind of shows the difference in the market's perception versus what those that have followed Tesla very closely have been seeing for quite some time. Anyway, Jonas also talks about revenue share, so he calls it wallet share here. But he notes that because Tesla has a higher average transaction price than the average vehicle, so he's putting Tesla at around $60,000 in the US, about 30% higher than the average, Tesla's getting a bigger share of revenue than their market share would imply. So they're estimating for January, Tesla had about 4% market share in terms of units, but actually 4.6% of the revenue share. I do think it's good to look at it that way, and probably even more insightful would be the profit share, because Tesla should even more significantly outperform on that metric. So you'd have to put together a lot of numbers to get that. I don't have time for that today, hopefully at some point. But if we just use those numbers that we just talked about with Ford, for example, between the world of Ford and Tesla for 2021, they combined for about 4.9 million deliveries. Tesla's unit share of that would have been 19%. Their share of automotive revenue, a little bit higher at 27%. But Tesla's share of the combined operating income, which would have been just over $11 billion, would have been 59%. And remember, we've spent a lot of time talking about a lot of factors that suppressed Tesla's operating income in 2021. As Tesla's market share grows and their scale grows, their economies of scale grow, their profit share should grow even faster, especially as transitioning away from internal combustion engine towards electric vehicle is likely, in my opinion, to put pressure on the profitability of these other automakers. Jonas opened this note by talking about how some of these things are hard to see. Well, if even the top line is hard to see, then I guess the bottom line would be too. So we'll use a Tesla phrase here and say that this is not well understood. That could pretty much be Tesla's tagline at this point. Anyway, the other bullet in this Morgan Stanley note that I think drew some headlines today was Jonas saying that they expect Tesla to surpass a $300 billion revenue run rate by late 2026, at which point they estimate that would surpass both GM and Ford's combined global revenue. For context here, they are saying late 2026, but just to give some semblance of where they're at for that time period, Morgan Stanley is forecasting 4 million vehicles from Tesla for 2025. So that is a little bit higher among the range. I would expect they're probably low for 2026, but it's not like they're one of those analysts out there at, 2.5 million for that period of time or something like that. Lastly, on this note, they did include a little chart of how they expect unit share as well as revenue share for GM and Tesla to compare over time in the United States only, and where they see those inflection points happening. All right, next up, we've got another Tesla recall. This is going to be an over-the-air update as well, so hardly worth talking about, but some headlines, obviously, anytime this happens. 800,000 vehicles here being the headline number. The issue was with the fasten seatbelt chime possibly not chiming when starting the vehicle. That is required by NHTSA, so Tesla learned of this, made the determination that they would need to do a voluntary recall, filed that with NHTSA, and here we are. Next, we've got a quick update on Giga Texas. A new permit application filed yesterday has been found that is from Tesla, and this is for a project with the program name of Cathode. And this is for an industrial use facility on 32 acres that Tesla's got there in Austin. So this shouldn't be too surprising. I think we've seen some of the drone flyovers kind of allude to this previously, but either way, we definitely have heard Tesla talk about cathode production back at Battery Day, so good to see this permit application filed. Next, we've got a report on the solar roof. This is coming from Electrek, who says that they have learned that Tesla has informed employees that supply chain issues are now impacting the solar roof. Apparently, they have written, quote, "Most of the solar industry has been experiencing supply chain delays. These constraints are beginning to impact solar roof as well. This will lead to delays in scheduling installations for Tesla customers not already on the calendar." End quote. Electrek also reports that Tesla has started informing some customers of these delays and letting them know that, quote, "We do not currently have a firm timeline from our suppliers as to when these delays will end." End quote. So disappointing to see that, especially at the volume that solar roof seems to be at, but obviously not something that's very material to Tesla's financials, and actually might even be a benefit if they install fewer, as I'm not entirely convinced that Tesla's profitable on the solar roof quite yet. All right, next up, we've got a little bit more communication from the White House towards Elon Musk and Tesla, this time coming from Commerce Secretary Gina Raimondo, who Bloomberg reports would be willing to consult with Elon Musk on how to improve semiconductor supply chain shortages impacting the automotive industry. In an interview with CNBC, she said, quote, "None of this is personal. These issues are way too important for anyone to have, feelings hurt. Like, let's just do the work. And as I said, anyone who has good ideas or is willing to help us, absolutely we want the help." End quote. Oh, well, what a nice perspective that is to hear. Now, for this particular issue, I'm not really sure that Tesla or Elon Musk can really help out all that much. There are fundamental differences in how Tesla operates versus other companies. We've talked about those things. Tesla's talked about those things. Those have helped Tesla better manage through these shortages. One of those things being that Tesla didn't ever cancel orders and they had huge growth plans, which, as we know now, even though Tesla did post huge growth, they were still constrained by these issues and would have done better without them. So a 10% drop in Tesla's growth plans, they could still be up 90%. 10% drop in somebody else's flat plan, well, then they're going to be down 10%. Anyway, that's a digression. The last thing on this topic was Bloomberg also reporting that, quote, "The Commerce Secretary also downplayed animosity between Biden and Musk, saying she did not know of a policy within the administration that would preclude her from soliciting advice from Tesla." End quote. In the midst of the heightened awareness of this White House Tesla drama, Texas Governor Greg Abbott taking the opportunity to point out that Elon Musk has actually been to the governor's office in the Texas Capitol, also points out that Tesla's headquarters are now in Texas too. And he did share a photo here with him and Elon, but just to be clear, that was an older photo that was from back in 2020. So not a signal of any new conversations happening there. I mentioned that because I kind of wish there were, because as of right now, Tesla still can't sell directly in the state. Politics, so fun. All right, last thing here, Elon has kind of been long promising an update on Starship. So in a reply today to a thread that began with Elon noting that SpaceX's Falcon rocket will launch about once per week on average this year, and should be responsible for delivering about 2/3 of all Earth payload to orbit. Elon noted that Starship is in an entirely different league, and continued on to note that he will have a Starship presentation. We've got a specific time here, Thursday next week, 8 p.m. Central Time. That'd be 6 p.m. Pacific Time or 2 a.m. on Friday morning UTC. And that'll be Thursday, February 10th. So something to look forward to there on the SpaceX side, but that will do it for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Friday, February 4th episode of Tesla Daily. Thank you.